At the same sort of pattern here on Amazon. And I really do look at Bitcoin like the Amazon of cryptocurrency. I talked about Bitcoin heading down to 20,000. The main reason I thought it needed to get there is because that was the 2017 high. We've been seeing a lot of the dot-com-ish type stuff. For those of you that don't remember the dot-coms, it was basically crypto, but for the internet, right? The internet age was just dawning in the late 90s. Stocks were going up, from 5 cents to 20 cents to $1 to $5, just like a lot of cryptocurrencies did. And Amazon, by the way, was one of those stocks that just had an amazing move up. But just like with crypto now, the dot-com bubble collapsed. And a lot of dot-coms got wiped out. They went to zero. And a lot of them also were bought out for pennies on the dollar by the likes of the bigger players out there. So the same thing is going on here in crypto. And that's one of the calls that I've made going back to last November, is that we have to see that flush out. Part of that reasoning is just simply, if you look at how many cryptocurrencies there are like 20,000. There's no way that we can have 20,000 cryptocurrencies. It probably should be 50 or maybe just 20. So you have to flush those out. We've seen Celsius kind of get to that point of being almost insolvent. We've seen other cryptocurrencies like Terra Luna basically collapse. So it's in the process. The one thing I would say is, if you look at this chart, you should get a technical bounce here. Now, this is the important part here. So I am calling for a technical bounce back to probably this level here. Let me put a trend line in. So this is about 25,500. And then if that's able to be eclipsed, you have upside to about 28,000, maybe 300 to 400. However, I don't believe we are at the lows on crypto. So I think this is a trader's market in crypto. I think you get back to maybe 25, maybe 28. But please understand that my next target on the downside is 12,000 to 13,000. And I don't mean to scare anyone. This is just what the charts are telling me. It's my job to just tell you guys what the charts are saying. I do believe in cryptocurrency. I think Bitcoin is a fantastic way to get around the printing of the Fed, to get around inflation, to basically have a currency that you can transfer very quickly around the globe. So I'm a big believer in it. I think that once it bottoms out, it will have a run. Now, one thing I'd love to show you guys, let me show you guys this on the chart. I might have shown you guys this in the past, but if we look at the Bitcoin chart here, now notice this big M pattern right here, right?
Oh, yeah.
So we have this pattern here. And then what I want to show you guys is look at the Amazon chart going back. Let's go to the weekly so we can get back there, going back to the .com era. All right. So if we zoom in, and I hope I'm not making anyone sick moving the chart, but look at the same sort of pattern here on Amazon. And I really do look at Bitcoin like the Amazon of cryptocurrency, meaning that, Amazon's reached $1 trillion+. It's a mega sized company. It's taking over the globe. And you have the same sort of pattern here. And so this, yes, it collapsed. It went from all the way, if we look at the highs up here, let me go to the daily chart. So if we look at, let me just go back here, just bear with me here. Let me go to the monthly, in fact. And I apologize, my charts are being a little wacky. All right, so here, let me just say this. So here you got as high as, this is post-split. So it was, remember, Amazon just split recently. So, pre-split, it was about $112 and it collapsed all the way down to $6. So if you think about cryptocurrency and Bitcoin, it could mean that Bitcoin not only is headed to 12,000, but lower. But my bigger point is, look at that in relation to where Amazon went. Right. Wow. So now see that little M pattern back there?
Yep.
Right over here.
Yep.
And then look at where it went. So I really do believe that cryptocurrency, as it matures as an asset, will eventually start behaving much like Amazon. And that means there is massive, massive upside. You just have to weather the storm. We have to get through this kind of bubble bursting, and then the best will survive.
And you think that Bitcoin is one of those, like Amazon, that one of the best that will survive? Obviously,
I do, mainly because it's being adopted by so many bigger players as a store of safety, right? It's kind of the digital gold. And I was thinking about this because I'm a big gold fan too. You know that. I know you are as well. Is that gold is fantastic. It's something you can hold in your hand. It's been a store of value for thousands and thousands of years. Bitcoin eventually will mature into something like that. And the benefits are Bitcoin is that you can send it very quickly. If I take out a piece of gold or an ounce of gold, very hard for me to send that to my family in some other country. So there's a place for both of these. There's the one you can hold, and then there's the digital one where you can send very quickly. So I think as a short-term play, you are going to see some sort of rally here, because if you can see here, I mean, basically this thing had a nonstop run, and then it kind of basically put in a little bit of a short-term top. And if we draw a trend line across these highs, the low that we recently saw was right to that. So I think in the near term, it likely gets a bounce back. I could see 120, 125 or so on the price. But I do think we're in a new era where valuation matters. There were so many years where valuation did not matter for technology stocks, and now people want to see that value. And so the PE ratios for a lot of these companies have to come in. So my guess is, yes, a bounce here, but I wouldn't stay married to it for too long unless you're okay holding it for a really longer period in case it goes a little bit lower. Because I do think eventually it probably does head down just a little bit more. I think that the Fed, they're meeting later in July, I believe, towards the end of the month. They'll tighten by another 50, maybe 75 basis points. I think they're trying to kind of front load because they know the economy is going to come to a screeching halt. I think that they're trying to bring inflation down with all their might. But my guess is, yes, it will come in, but they're basically going to force the US into a recession. And that mainly could mean that you see the whole world enter into a recession as well. So that's my biggest fear here, is that the Fed has always played from behind, right? They played from behind in 2008, 2009, not starting any sort of quantitative easing until 2009. And even in COVID, they kind of were a little late there. But when they came in, they came gangbusters in. They always have a tendency to go too hard and be late, so they're trying to play catch up. And I think that this is that situation where, yes, I think interest rates need to go up, but doing it this quickly, you are sending a shock, especially when commodity prices are already hurting the market. Inflation is already hurting the consumer. Now you're basically causing the housing market here in the US to come to a screeching halt and start to decline, many, many other things. So my only concern is that they're doing it too quickly to try to get back in front of the situation, and that could ultimately cause a recession. I think that my guess is that you're not going to see price, right? So prices tend to be sticky, and this is the same for wages, for prices. I mean, gasoline comes down, we know that with oil, but notice how, again, when oil goes up $10, prices go up really quickly at the pump. When it drops 10, it goes down really slowly, right?
Yeah, funny about that.
My fear is that a lot of the prices that people are seeing in the stores will stay. Now, maybe they don't go up much, maybe only just a few percentage, 4 or 5% a year, but that's going to put a lot of people in a hard position where, unless they're making more money, they're going to be struggling. So I do worry that there's certain areas of the population that are going to feel like it's a depression. But I also think that it probably won't be a true depression for at least 5 years or so. So I think the Fed is going to play this kind of back and forth game where, as we slip into recession, they're going to start to cut rates again and start to print money again. Then inflation is going to surge again. Then they're going to have to raise rates again. And then that's going to slow the economy. And it's going to be this back and forth, kind of this, which one's the worst scenario for us? Let's attack that one. And then eventually later this decade, I do think we have a depression. I mean, basically, I'm looking at the 100-year cycle, noticing how again, we had COVID with the Spanish flu, about the 100-year cycle. And it does tell us that something's coming. And you can almost see the writing on the wall, right? I mean, all of these things that have been done, this financial maneuvering by all central banks, I mean, all of us know it's not going to end well. It's just, when is that timing where everything just kind of falls apart?